Hello everyone, George DeSantis here with the look at the market for the week ending July 6, 2018. As usual, before we get to look at charts, read the disclaimer that's on the screen and be sure you understand this is not investment advice. It's simply for educational purposes. It's mostly for my purposes, first of all, and then for any of those who care to take a look. So we'll start as usual by looking at the weekly chart of the S&P 500 to get the broader view of the market. If we go back all the way here into February, we'll see we have the beginning of this ABCD triangle, and then we broke out of the triangle. Parabolic went below the most recent bars. We hit a resistance at about 2800 and pulled back, and that pullback found us support at about 2700, which was exactly on the 50% Fibonacci retracement line, this dotted line. We found support there, and last week we also had a very bullish engulfing candle. This candle's body completely engulfs the body of this candle. One might also say it looks very much like a morning star, because you have this bearish candle and you have another bearish candle, and now you have this very bullish candle. It looks to me like, and of course take a look at the parabolic. Parabolic is now situated way below the most current bar. So the current bar. So it looks as though this 50% retracement level is going to hold as support. And how high we go from here is another big question. Obviously, we got to break through the 2800 level now, because for some time we've been talking about 2750 as a support resistance line, and we seem to have broken above that just barely last week. 2759 is what we closed at. Now MACD remains above the zero line in bullish territory, ever so slightly so anyway. RSI 12 above 60%, especially on the weekly chart. That's very instructive. It's very bullish. It tells us that we have a pretty good uptrend. Williams percent are above the 50% line, and as you know, that's the line in the sand for me. I like to see the stock or the index above the 50% line, and we just got a cross back above the 4% line last week on the sum of the rate of change indicator. So all of these indicators are looking pretty bullish, and we're seemingly finding support at the 50% Fibonacci retracement level. So the question is then how soon and whether or not we will break above the 2800 level, which seems to be resistance now. Now, as we look at the daily chart of the S&P 500, you could see similarly we made that high here, finding resistance around 2800, and we pulled all the way back to the 50% retracement level, Fibonacci retracement. You could see this candle touching it right here. And then we started a rally back up. So apparently last week we were rallying from that 50% retracement that I discussed last weekend. Right now we have the parabolic switching to the below Friday's bar, and that's instructive. That's telling us that as far as Fibonacci, the parabolic is concerned, we now have a switch from this downtrend to an uptrend. If we look at, and by the way, before we leave this section of the chart, the two standard deviation upper Bollinger Band is somewhere near that 2800. So that's going to act as some resistance. However, if we look at but we do have some room to run to get there. Now, if we look at the MACD is trending up from below the zero line. Last week I mentioned saying that it was trending up ever so slightly right here. But these 5 bars here, last week's bars on the daily chart, indicate that we continue to trend up from below the zero line. And those of you who've read Alex Ellis' books know that he points out that this is one of the times to be buying the market, when MACD is trending up from below the zero line. Going to look at the other indicators here, we have RSI 12 breaking above the 40% line, and although it isn't as instructive on the daily chart as the weekly chart, it's still worthwhile to take a look at it. It's breaking above the 40% line, and Williams percentile is breaking above 50%. Now we just need this sum of the rate of change indicator to continue to trend up and break above 4%, and that would confirm this uptrend here even more. So all in all, we have a turnaround here with support at the retracement level, the Fibonacci retracement level of 50%, and I'm expecting the market to go higher. Another interesting phenomenon is, and I've read this in some area of research, somebody's research seems to suggest that when you have a Friday bar closing higher than its open, usually, in most instances, you get a Monday, a very bullish Monday, or somewhat bullish Monday. So we'll see if that plays out. And before we go on to individual stocks, and perhaps a few other things on the S&P before we go on there, let's take a look at the Qs, which is an ETF of the NASDAQ. I believe it's the NASDAQ 100. In any case, what I wanted to point out here is, it's often said that the NASDAQ leads the rest of the market. Now, I noticed that NASDAQ didn't have as much of a retracement as the S&P. NASDAQ retraced to the 38.2 Fibonacci retracement level right here, this dotted line. It didn't even get to the 50% retracement. So that's a good indication that the NASDAQ is still strong, stronger than the S&P in general. And now we have a very bullish engulfing candle, this candle engulfing this one. And it seems to me we're heading higher because the parabolic is now below the most recent bar. All these other indications here are very bullish. Here are a few more charts on the S&P. We can see here that this regression channel is trending up on this one-year chart. This is a one-year chart. So it's trending up. It found support at the 10% line, this lower line here. Found support again, and it's been trending up. You can see these trend lines. Let me remove the crosshairs. You can see these trend lines beginning to look as though they're crossing above each other again. That's the 4, the 9, and 30 moving averages. Now we're at the 30.2 extreme level, so we have room at the top. We have room to grow to get to the 90% line if we're going to get there at all. Let's take a look at the seasonal on this one. And on the seasonal chart, if we use, let's say we change this to 28 days, a little longer period than 14. And if we examine what's going to happen in July perhaps, well, what we see here is that from June 27th to July 25th, 92.86% of the time, that's 92.86 win percentage, you get an average of about 2.69% profit. So that's 13 out of 14 years. That's pretty good statistics. So I'm expecting a rally in July, in other words. Okay, let's take a look at something else. A quick look at the new high, new low index, 5-day average. You can see that it ticked up recently. So we're back above the zero line, and that's encouraging. And of course, RSI became very oversold, and now it's back up again. Here's a chart with the impulse indicator. You can see that we retrace that. We saw that retracement here. We got into the buy zone between the 9, that red line, and the blue, which is the 30 EMA, 30 weighted moving average. So it was meandering in this buy zone here. Then we got that bullish green bar last week, 2 weeks ago, and then last week we got this nice looking bullish bar here. So we're turning up. We're seeing all indications that this market should rally some more. And here's a chart with the McClellan oscillator, and you can see that but last week it really made a nice move up. So that's pretty bullish too. And now the number of stocks in the S&P 100, the percentage rather of stocks in the S&P 100 that are above the 200-day moving average has ticked up again. So we're above 50%. We're in that trading range again between 50 and 65%. So we take a look at some individual stocks. As usual, we start with Apple. You can see that it had this really nice trend up here. Take a look here. You can see this trend up here, and then it developed a bearish divergence of MACD. You see, as market made a new high, MACD made a much lower high. I trade Apple back and forth, and I remember selling it when it was approaching this very high level here, overbought level. Now I'm back in it again. I bought it somewhere in here. So that's Apple. Put it somewhere in this area here. The other indicators are looking good. MACD trending up from below the zero line, and all of these other indicators are looking pretty good. Another one that I like a lot, I own it, is Visa. And you could see that it had similar to Apple, it had a bearish divergence of MACD and pulled back. But it seems to be working its way up again. Here's Netflix. This thing has been such a tremendous move here, and then it pulled back a little bit into the buy zone, and now it's moving up again. So Netflix looks like a stock definitely to hold on to here. Here's Align Technology, one that we've been looking at for quite a while. It became overbought here, pulled back, made a retracement, and now it seems to be looking to trend up again. Here's Microsoft. Microsoft looks very similar. Made a high, was overbought, pulled back, consolidated, and made a low here, and now it's trending up again. Looks pretty good. These indicators are all in positive territory. MACD trending up too. Here's MasterCard. I noticed that we may be in a squeeze of the Bollinger Bands, very narrow, and MasterCard continues to do so well. This is a daily chart. So it retraced a bit with most of the other stocks. Now it's trending up again. You can see RSI 12 trending up. All of these indicators in good territory. Here's IDXX. Own this one. You can see that it found this support here, the 50-day moving average, and since then it's been going up again. And now this looks like a bit of a squeeze of the Bollinger Bands. But notice the 3 moving averages are now one above the other, the shorter terms above the longer terms, right? And MACD trending up, RSI 12, all these indicators looking pretty good. Here's XLK, which is a technology ETF, and I used to own it last year. I don't own it right now, but I'm looking to buy it again. You can see that the trend is up. You can see that 4 just crossed above the 9. We have a nice bullish bar, and it's tracking the NASDAQ technology stocks. This MACD is trending up, and these indicators are looking pretty good. Here's CRISPR. You know, I bought and sold it, made some nice bucks on it, but it's now seemed to be finding support at the 50-day moving average and trending up. It's gradually moving back up again, but I wouldn't be buying it until I get some more news on their technology approval by the FDA. Here's Adobe, one I own. It's found some support, it seems, at the 50-day moving average, and it's trending up again, hitting the parabolic. So parabolic should move below the next bar, and MACD trending up, and all these indicators are looking pretty good, except for some of the rate of change, but it seems to be approaching the 4% line. And here's CRM, Salesforce. It's one that I want to own, don't own it, but I want to buy it or trade it somehow. And you can see how nice this trend looks. I mean, when you crunch it up, look at that. We don't have much time left, so I want to say I hope you had a great weekend. We'll have to do this again next week, but it looks pretty bullish to me anyway.